Good afternoon, good evening, ladies and gentlemen, good morning, and to one and all to have listening in today. This is Singapore channel of Singapore FinTech Festival 2020, and this session, SME Go FinTech, is exciting. We got 45 minutes of non-stop action. I got with me four distinguished guests. But before that, my name is Marc Leong. I represent Singapore FinTech Association. Well, that's my volunteer job. I also have full-time job at Maybank Singapore. And let me just quickly introduce the four guests here this afternoon. We've got Victor Lee, CEO of CIMB, gentleman in the black suit. We've got Paul Hadjy, CEO and co-founder of Horangi. And I'm going to do this. Horangi is a Korean, a tiger. Olivier, Siah, co-founder, CEO of Fraxtor. And we've got James Crosby, CEO of Fencore. Now, great to have all these four gentlemen here joining us this afternoon. All male power, all male dominance. We're going to start off probably this whole session here. The next 45 minutes is going to be fun. Let's start with Victor. Victor, CEO CIMB. One of the newest CEO in the Singapore banking system. Tell us about your journey, Victor, to your current position as bank CEO and your impressions thus far of Singapore FinTech Festival or even the Singapore FinTech scene generally. Victor.
Yeah, so thanks, Mark. So I'm pretty much a dinosaur now, 25 years in the banking industry. I don't think I would be employable in a lot of FinTechs these days. But this 25 years started obviously with, I think, pretty humble background. Didn't come from a rich family, but really worked very hard, put in, 16, 18 hours a day sometimes. Spent in Singapore, but actually enjoyed most of my time outside Singapore in Malaysia, Taiwan, and a good part of the time also in China. So banking was not exactly what my parents wanted me to do. They wanted me to be a doctor or an accountant or a lawyer. But I thought, banking was easy actually. It's just a marketing company, marketing financial products. And then that was just the beginning 25 years ago, and here we are today. And I think banking really is a people business more than everything else. And underneath the people business, really, it's technology, infrastructure, and I always tell people hire well, hire right. And when we've got a good team, everything just falls in place. And just like everyone else, there are three groups of stakeholders, right? Our customers, our staff, and our shareholders, right? And it'd be interesting to note that, with the fintechs and the bank tax coming through, ROEs under a lot of pressure for the banks. Gone are the days, double-digit ROEs. With the pandemic, you'll see the ROEs falling to below 10%. Yeah. So, moving into the impressions of the FinTech Festival, we came into COVID, I think, in February. Everybody was just shell-shocked when we got into it. I think thankfully, globally, everybody fell into position, especially the governments, especially the banks. We would become systemic issue if we didn't facilitate all the financial programs governments were dishing. So really, when I looked at the FinTech and everything virtual, everything now is 24/7. This is really the COVID new norm, and everyone is pivoting. Right, today, 50% of our people continue to work from home. So I think it's refreshing actually that the FinTech Festival is totally virtual. It's so major, and I look at all human beings pivoting so quickly. So really within the bank, we are also, the last 10 months rethinking all our digital strategies. We're accelerating, we're over-investing, so that we are far more digital than we can be to take on the world, right? And with the new licenses coming up, for us, ever more important, we are not a local bank, we are a foreign bank, but we're nimble. We don't have huge rentals and costs to deal with. So with FinTech Festival and us pivoting, actually looking forward to a lot of cool stuff. And actually, all my my management team, everyone is curating and meeting people online this week actually. Yeah, man.
Yeah. So, thanks, Victor, for those thoughts. No, you're not dinosaur for sure. 25 years is it's just nice. perfect banking experience. And the FinTech will fit right in, I think. And we're going to talk a bit more later on in the rest of the evening. And let's have Paul Hadjy, CEO co-founder of Horangi. Paul, sorry if I pronounce your name wrongly. Is it Paul Hadjy or is it Paul Had? Can I get some thoughts?
Hadjy. That's correct.
Hadjy,
yeah.
okay. Paul, you are a cybersecurity compliance guy. Tell us about, I've read your bio, a serial entrepreneur. I think you started in very young age, college days, work in many countries across the world. Counterintuitively, you are actually an engineer by training. So you are taken the less certain, less structured, less sure path. Tell us about this whole journey and why does this make you happy?
Sure, yeah. So yeah, as you mentioned, I have started a couple of companies, and some of them successful, some of them not so successful, which I think is part of every entrepreneur's journey. But I also got an opportunity to work for the government right out of college in the US. And then I worked for a big tech firm in the US called Palantir, which I'm sure some people have heard of for about 7 years as well. So I have gotten to experience both sides of both the entrepreneurial side as well as working for a tech company and governments as well. But I think for me, like generally, I've always haven't been very risk averse. So I've always been sort of interested in things where there is risk and trying to see opportunities kind of in the situations where there is a downside. But it's always been a part of me. So like even when I was a kid, like growing up in the U.S. and like the neighborhoods, like there's a lot of grass cutting and in the wintertime, a lot of snow shoveling going on. And every year I would be knocking on my neighbors' doors asking them if they would like me to cut their grass or shovel their sidewalk or their driveway. So I think it's always been something that's ingrained in me, just building things, creating things. And then that kind of brings me to the engineering. And I think engineering, there's a lot of entrepreneurs that of course come from that field. But ultimately, I think the reason I enjoy engineering is because you're building something, right? Which is not really any different than building a company, right? And in our case, like we're using software to do that. So I do get to experience both the engineering aspects of my studies, but also the building aspect, which I think is ultimately what I really enjoy. Yeah, and I think that for me, like my favorite part about entrepreneurship is both helping people and building things, and I luckily get an opportunity to do both.
Yeah, thanks, Paul. So I like this part here. He's kind of using his training as an engineer to kind of build stuff, and he uses an excuse to say, I'm starting a business, I'm building a business. I like it, Paul. We're going to talk more in a while's time. Nice, Paul. Oliver Siah, I think Oliver is a property guy, real estate guy. Today, co-founder and CEO of Fraxtor. Very interesting. I want to ask him how you come up with Fraxtor. Is it from Fraction? Oliver, you have been in real estate business for a period of time. You have pivoted into this totally quite different thing. Maybe not different, but prop tech, if I may. Blockchain prop tech of Fraxtor, and together with your partner Rachel Teo. Tell us about this whole journey and what is Fraxtor all about?
Hi, yeah. So I didn't start off in the real estate profession. I was a military pilot in the Singapore Air Force for many, many years.
Right.
But so my real estate journey started really about 18 years ago when I bought my first property. Back then, I mean, there are many barriers to entry to buying an investment property, not only in Singapore, but anywhere in the world. You got a high capital outlay, you got the illiquidity of the investment, and also the access to good quality products. So when I left the Air Force, I've been raising capital for real estate investment projects and development projects in Singapore. We partner up with Rachel Teo of Daniel Teo and Associates. So they had a very similar idea of democratizing real estate investment. So with that in mind, we form Fraxtor, which stands for Fractional Investor, to allow really a small investor players to join in to bring institutional grade real estate investments. Yeah.
Okay. But Oliver, 18 years in property is not a short time. So let me see. You started at the age of 5, right? So 5 plus 18 that makes you 23, and Fraxtor has been around for 5 years.
Fraxtor has been around for about 4 years.
4 years, okay.
But we have only started operations since last year, June.
Okay.
Yeah, that's because of MAS regulations around these products.
Okay, you have got some ventures already, some projects done up. We're going to speak a bit about it shortly. Yeah, and the audience will surely be very interested because property is kind of it's a key play in Singapore. Let's move on to James Crosby, CEO of Fencore. James, you're all about data management. 20 years in software and tech play. James, you have lived in major cities, London, Zurich, Sydney, and now Singapore. I'm going to put you in the spot. So which of these four is your favorite city and why?
Yeah, that's a very good question. I mean, each one of those actually has its kind of pros and cons. Sydney is such a livable city, but then it's kind of sometimes a bit tricky to get around as well. It's got these beautiful beaches, but to get into the city centre from Bondi can take you, an hour and a half sometimes on some days. So I'm not just saying this. Singapore is actually topping the list. It's my favourite place to live. I can see ourselves living here for many more years to come. It's got a really good ecosystem for the fintech space as well, which is why the Singapore FinTech Festival does so well every year and is growing and growing. So yeah, it's a great place to have your company headquartered in the fintech space.
Okay, James, you're not telling the truth. You're telling me it's Singapore, fine. If you go to Sydney, you're going to say it's Sydney, huh? All right, I'm going to let you off the hook just for once, all right? Yeah. Come back to you and give you some punishing questions. I'm going to talk more later. Now, this stuff, and we're talking about SMEs, Go FinTech. I think we're going to come back to Victor. Victor, you have, I've read in some of your press releases that the SME segment will feature prominently in CIMB's plans in Singapore and even the region. I think it's always been a big play. I think SMEs in just about any part of the world, Singapore especially, is about close to 50% of the GDP, its contribution. Workforce, I think 65% of the workforce in Singapore works with an SME. Now, this is SME going FinTech. You're going to get a lot more SME customers, the small medium enterprises going digital, going FinTech, embracing technology at the highest level. Now, does this at all change your approach or strategy to serving SMEs? And what are your thought process behind collaborating with these SMEs or even FinTech vendors to propel your SME business?
Yeah.
Business for
so I guess like I said, right at the beginning of the COVID, it felt like doomsday for everybody. People in the hospitality, people in tourism, in aviation, whether you're a large corporate, you're an SME, in those three sectors or segments, you feel that it's almost the end of the world. But as we call it in Chinese, the SMEs are like a cockroach. You can't kill a cockroach. Right, and we will survive, and they will survive. So I think really second quarter, COVID hit ASEAN very hard. Everything was in lockdown. Today we have come out of the eye of the storm, and a lot of SMEs are back on track. Right, and people who have not pivoted to new normals, yes, I think they have to close, and that is the nature of the beast. Right, not all SMEs survive. In fact, 80% of SMEs actually do not survive after the first 3 years, right? And that's a reality. But that kind of mindset that they have decided to do a startup or to become an SME, I think that spirit is really important to bring the entrepreneur, to bring a country to the next stage, right? And like you rightly pointed out, I think 50 to 80% of a country's GDP is really propelled by the SMEs, right? So I think for me, what I've really seen actually the last 10 months is SMEs being very flexible, being very nimble. Everybody has really pivoted. And as a result of which banks or providers of services to SMEs, everyone really has to digitize, right? And even brick and mortar restaurants and all this, how they have done delivery. I know of restaurants that have done delivery very well. And today they're even expanding, right? The shopping malls are not empty. In fact, if you look at ground floor shopping malls these days, it is not the big stalls. It's actually restaurants occupying first floor, ground floor. So consumer behaviors have all changed. Table sizes are no longer 10. Now tables are 2, 3, 5. So if you pivot well and you pivot fast, you really can catch on actually a lot of opportunities. And if I come back to banking, given that there are now 4 virtual bank licenses coming out, what do customers really want to expect? What will they be expecting more? They want better experiences. They want frictionless integrations. I think that's going to be key. And banks need to use data to get a lot more into their customers. And that's really where I think big financial institutions, would have little gaps in their offerings, and that's where the fintech, the virtual banks can come in to fill those gaps. So I think the SMEs out there will be given more points for choices, and there will be more competition. Prices will come down, and whoever really nails the customer journey, nails the customer experience, they are going to win a lot more customers. And if I come back to CIMB as a bank, and that's what we've really done, right? Digitize the front line, our salespeople can interact with our customers far more efficiently. Whatever is happening in the branch today, in the next couple of months, we'll almost completely have all branch services digitized into our app. Right? So I think that's something we really need to do, and if we do not do, we ourselves will die, and some other better play will come. So, and I also recall in really Q2, very quickly with a chatbot company out there, within the course of 3 weeks, we rolled out our first what we call COVID chatbot, right? There was a lot of confusion in the market. Everybody was throwing programs. Every government was giving COVID relief programs, but nobody knew how to tap on it, how to apply. And that's where within a short period of 3 weeks, we rolled out what we call EVA, our COVID chatbot. And I think we won some awards for that. Today, EVA has gone bilingual, from English now. You can even access it. You can speak to it in Malay. Yeah. So for us, it's delivering a service to the customers in a digital way, and really the other thing that we'll be continuing doing is partnerships. Partnerships with a lot of SaaS companies, accounting software companies, HR software companies, and even a lot of e-commerce shop builders. Right. So I think we are also really keeping ahead of the game, so that we provide more and more services to our customers, and really want to become an integral part of their trusted partner. Yeah.
Yeah. Thanks, Victor. So I hear pivot, I hear client journeys, I hear the chatbot, I hear partnerships. So you're well entrenched, really going into the ecosystem of technology and even fintech. So congrats on your awards as well, winning it. And on the spirit of technology and fintech even, we're gonna jump straight to Paul. Paul, you run Horangi, and I think cyber security and compliance is your key area. Now, if I want to do this, if banks or even SMEs or even corporates are embracing technology in a big way, I know that with Horangi Warden, you are cloud-based cybersecurity, and you're already secured and are serving some of the large guys like Gojek, FavePay, Property Guru. Now, how does your product or service work, and does it only apply to the large guys or even to the SMEs?
Yeah, sure. Great question. Appreciate that, Marc. Yeah, so Horangi Warden is actually a multi-cloud cloud security posture management solution. But essentially what that means is it looks for misconfigurations for security and compliance issues in the public cloud. So right now we're integrated with AWS and GCP, and are soon launching Azure and Alibaba. But essentially it looks through the different configurations in a multi-cloud environment or a single cloud environment, identifies those security issues, and of course allows you to comply with local or regional compliance standards, like MES TRM or MES Cyber Hygiene or RMIT in Malaysia, or OJK's requirements in Indonesia. Yeah, so like in terms of like whether it helps the big or the small guys. So like as you mentioned, we do work with a lot of tech companies, but because of course they're almost all based in the cloud. But we also work with a lot of large financial institutions as well as large insurers, because we kind of focus on the regulated industries because of the compliance piece of our product. But when we first built our product, just like the cloud service providers, what we try to do is enable all companies of all sizes, the ability to secure their infrastructure. So the pricing model scales up with usage. So we have companies as small as 10 people using the product, we have companies as big as 10,000 people using the product. So you know, it really doesn't matter, and the pricing scales to adjust based upon the usage of their cloud environment, which generally, I think, when a company's using cloud, the cloud also scales with the growth of their business. So it kind of aligns incentives from the organization in terms of investing in their security, along with the growth of their business, which ultimately in security, if you can establish that, it's really important, because you know, yeah, the earlier you put security in, the better off you are as an organization.
Yeah, so Paul, just add to that point, because Victor mentioned as well with the whole last 9-10 months when the pandemic was at its full steam and everything, and also companies have gone digital. The e-commerce portion of life has kind of like just pivoted up and just boomed up and everything. Digital transformation, digital adoption, big time in Singapore, big time in Southeast Asia. Has that positively affected your company's business, and what are your views on that?
Yeah, definitely. I think, like, you know, given what's going on in the world, a lot of people are making the switch towards digitalizing their businesses in some way, if they're not already digitalized. And if they're already digitalized, they're starting to think more about security. If you look at every economic downturn, security is one of those things that does creep up during an economic downturn, mainly because people are more concerned with protecting whatever assets they have throughout that time, and whether that's like financially protecting it or you know, securing it from security, physical, cyber, whatever it may be. You do see it go up, not drastically, but a little bit. So I think, like, we're lucky enough to be not someone who's benefiting from the crisis, but someone who can still sustain a business throughout it. So I think from that part, we are lucky. And actually, a lot of companies are switching, of course, as we're all, a lot of us are working from home. They're having to build out infrastructure in the cloud. And they don't know how to do it, right? They've had to make this switch very fast. And security and compliance is, of course, one of the biggest things that's important to their organization when they do make that switch to the cloud. So we are getting a lot of customers that are sort of coming to us to help them along this journey and using our product to identify those issues, fix them. Because we just launched one-click remediation, which essentially not only can we identify the security issues, they can actually just fix them with the click of a button. So that's become a really big feature for us to allow them to secure their cloud infrastructure. And with the scalable pricing, it's not something that's expensive, of course, until you move your entire infrastructure over, which, you know, kind of aligns the interest of that organization as well as with us. Yeah, and I think we also about a year ago made a focus on focusing more on regulated businesses because of the compliance aspect of our products. And of course, in those businesses, you know, there are regulatory requirements for cybersecurity, which of course does help us get that budget, because it is a line item in their existing budget. You know, oftentimes it won't grow very much during a crisis, but of course the budget is still there, which is you know, something better than what some people have, right?
Very nice. Always nice to hear a fintech guy doing so well. From 10 people to 10,000 people. Very nice. I like it. And yes, the compliance costs, as those who are in the business would know, any business for them, not just financial services, is just going up higher and higher. And yeah, I think it's going to do really well because compliance is a shoe in these days. I'm going to take the gears off a little bit to move on to something a little bit more. A bit more close to the Singaporeans' heart property. We talk about Fraxtor, fractional investment. Oliver, now Fraxtor's, if I read correctly, and I've done my research a little bit, your co-investment or bite-sized ownership concept. You have deployed, it's been successful. You have deployed the monies and over several residential projects and commercial buildings in Singapore. If I read correctly, Singapore, Berlin, even Melbourne, right? Very close to Sydney. Now, how challenging has it been to acquire investors? I understand that right now you're moving on AI, on the accredited investors, not artificial intelligence. I know this is a SFF week, right? Accredited investors. How difficult has it been? What are the comments been for the investors, for the AI guys? And are you thinking of moving out into the masses, the guys with less than $1 million?
I think a product like or a platform like Fraxtor really serves the non-AI market very well. But I think because of regulations, and then we want to progress step by step. That's why we have initially launched for accredited investors. But in the future, definitely we will go down to the non-accredited investor space. So what we have been getting from the accredited investors are that, you know, they really love the idea that they can diversify their portfolio, because the minimum investment on our platform is about 20,000. But if you go to the bigger funds out there, you know, you're looking at $250,000, $500,000, or some even $1 million. And that really puts a lot of these accredited investors, out of reach for all these properties projects. So when a platform like Fraxtor first came out, I think we had a lot of people signing up who are non-AI, and then we have to push them away. Yeah, but I think right now we have funded. I think the last 9 months we have raised more than 9 million Singapore dollars worth. So that's a right on from circuit breaker up to, I think we just did the checks today. We have raised more than 9 million Singapore dollars. And we only started operations last June. So I think that is a very good indicator that there are people are moving away from traditional type of fund structures and coming onto a platform like Fraxtor to invest in real estate products, and that also gives us the courage to actually take on more projects, because some of our projects are actually in such high demand, they actually get oversubscribed within the first 3 days of launching. So that is a very good indicator that I mean people want to invest, but how are they going to invest, right? So we feel that a platform will definitely push us forward. And also Fraxtor is a blockchain enabled platform, so we issue digital securities on the platform. So we feel that is the next leap in terms of how people can invest in real estate assets. And so yeah, so definitely we want to push that along, and in the future possibly touch the non-accredited investor, as well as launch an exchange where people can trade their units of digital tokens.
Oliver, so I'm quite curious, and also for the audience tuning in, they are curious. Yep. So we're comparing Fraxtor's business model with the likes of the traditional stuff, as in like just buying a property straight off, buying property yep. shares, buying REITs, right? Now, how can you how attractive is this your business model versus the traditional instruments, and how does blockchain feature? I mean, you touched on it a little bit, okay. But for those who are uninitiated, how does blockchain or distributed ledger technology feature in your whole business model?
Okay, so maybe let me just cover the direct real estate investment. That's where you just walk around the street, and then you just point at something and they say, oh, I want to own this, I want to own this property, right? And then you go into a conveyancing process. So that in itself requires a lot of effort. Firstly, the conveyancing process can take up to 2-3 months. I mean, if any of us have bought property before, even your own home, I mean, that's a substantially long period of time. And then we need to put in a large capital outlay. Maybe about 20 to 25% in upfront cash to buy the property before you can take a financing on the remaining amount. So that in itself creates certain barriers of entry to certain investors who don't have that upfront capital. And because of the illiquidity, right? I mean, if you have invested in this asset, and then for you to divest is going to be very difficult. That's why I think with the Fraxtor platform, what we did was to create bite-sized chunks of a piece of property. We take care of the financing, and then we allow people, maybe in the future, once we are properly licensed to do so, to allow people to trade on an exchange, right? That will give them some liquidity for their investment. The next investment product, like what you pointed out, Marc, was REITs. I think REITs are very good investment products for retail investors. I mean, for everyday investors, they invest bite-sized amount, but actually, when you look at the product itself, it's really an income yielding play, right? You buy a REIT, you get a fixed distribution on that, but you don't really get the big kicker at the end. So, for example, when the REIT manager divests a certain project, you don't suddenly see a big lump sum coming back to you in distributions. The REIT manager usually just redistributes that into other assets, right? They acquire other assets just to increase or try to maintain or increase the distribution per unit. And then REITs have also a limitation where they only can invest about 10% in development properties. And then if you see the development market, that's where most of the money in real estate is actually made. And then if you talk about listed property developers, those are notoriously known for paying very little dividend, and they are trading at about 0.5, 0.6 price to book value. So to me, it's a very unfair play. Although they make money on their projects, they're not going to give you really a lot of dividends for that. So we feel for Fraxtor, we go into a direct real estate play. So we see a property, we securitize it using SPVs, we put it on the platform, and then using blockchain technology and smart contracts, we create digital securities based off that. And I think for us, we have only scratched the surface of using blockchain technology. We are currently a very one platform play right now, but I think blockchain technology will allow us to really transcend the platform boundary, transcend the geographical boundaries, to really transact and also to manage an efficient secondary market anywhere in the world 24/7. So that's the benefits we saw when we adopted blockchain technology, and I think a lot of platforms right now in the market have only scratched the surface of blockchain. We haven't really dived deep into the full capabilities of blockchain technology, which is something Fraxtor intends to do in the coming 1 year or two.
Yeah, surely, because we talk about single property or even Malaysia or this region, we are notoriously paper-based, right? It's so old school, central depository led, paper-based. We are way behind, and essentially, and I go with that. We're just scratching it right outside of that door.
Yes.
In this whole smart contract led property play. Thank you so much. This is wonderful. James, gonna come back to you. Sorry, it took some time, James, because you were bluffing on the Singapore being your favorite city. So I'm gonna come back to you now. You have EDM solutions. This is about high data quality. You talk about that. You talk about exceptional management, reduce the risk, improve SLAs, cost savings in your whole solution for Fencore, James. Tell us how exactly are you doing this? How exactly are large companies or even SMEs benefiting from your solution?
Yes, that's a very good question. So we have a platform called Fencore EDM, which is a cloud-based or on-premise based, if that was preferred by our client. But generally, it's a cloud-based product that helps connect to that financial institution's unique set of source and target systems. So every financial institution has different kind of data sets, maybe internally generated data, combining that with data that's bought from data vendors like Bloomberg or Refinitiv and all the others too. And then you can get into sometimes a bit of a mess with all this data that's being consumed. So our platform helps to validate the data as it's coming in. And one of the big differentiators for us is we're a no-code platform. So there's no need to do any complicated scripting or coding as part of our platform. It's much more intuitive and drag and drop and so on. So that's the goal, is really to shorten those notoriously long implementation time periods that you have at the beginning of a data management project. So we're trying to start talking about days and weeks rather than months and years in terms of how long it takes to onboard a data management platform, and being more lightweight as well. Talking about SMEs, we kind of have this lightweight platform that actually can target smaller use cases too, which might be a boutique buy-side firm. We do for now target only the financial industry, but in the future we do intend to spread out and also target other industries as well that have data management pain points. So in the future, I think we'll kind of help other corporates and various other industries too.
So James, you are what you're trying to say is that you are able to solve. Okay, look down here we have got two guys here who are rightly in the bank industry. Victor's with CIMB, I with Maybank. So are you saying that you're able to solve the data monsters that's within us? We have decades of legacy data reservoir systems. You know this better than anybody else. Enhanced by layers and layers of stopgap. We always have enhancement of software to kind of stopgap whatever it is, and then so we build layers and layers upon the original core system, right? The original banking core system. So are you saying that Fencore is able to help these large monsters that we call banks in our database, help us to kind of ease into whatever we need to do?
Yes, I think there's a whole host of different use cases that our platform can help with. The core engine is sort of data agnostic. It could handle any type of market data, maybe static reference data, investment data, or even let's say business entities. If somebody wanted to put some automation around managing their business entities or their customer data, those kind of things could be then passed through our rule engine and validated and made sure it's all nice and clean, and then passed down to downstream systems. And of course, if any exception is encountered when we're checking the data, where we have the dashboards where a user can then check. So just as an example, let's say for the past few days, we received the same price for a certain stock. That could be a stale price, as it's known. You know, it's something along the path there is not updating to the correct price. But actually, on the other hand, it could also be a valid scenario. The price may have just not changed for the last 3 days. So we can raise an exception, that somebody can eyeball it and say, yes, that's not a problem. That's nothing to be concerned about. Or on the other hand, somebody could then make a change, and then we have the built-in 4i approval processes. So, and that's quite useful in the finance world, where compliance issues, compliance is very important. So not one person is allowed to make changes to the data. You have to have a second colleague or boss that comes along and validates that change, and that 4i or 6i approval process is out of the box in our software, rather than having to be configured over a period of time.
So James, is this some sort of AI machine learning thing you're using?
So we are looking at various ways to enhance the product with machine learning. One example of that is actually, let's say you've hit the same type of exception many times now, and each time the end users or the data management team make the same change in order to resolve that. So what we're doing is using machine learning to actually intelligently suggest that, the last few times that this issue happened, you took this action. Do you just want to apply that? So with a single click, they can apply that change much quicker. And so that we're targeting various ways of using machine learning to speed up and allow asset management firms and banks to operate even more efficiently.
Thanks for that. So now we last week itself, the last weekend, we also heard from the regulators, our MES, the announcement of 4 digital licenses, 2 full digital and 2 wholesale licenses. So this is, I guess it's been long anticipating. We were anticipating this announcement since June. Finally, it came in December. So kind of timely. I'm gonna throw the ball back to Victor, who is, running a bank, all right, a brick and mortar. Albeit he has got some of the tech stuff happening to CIMB. But Victor, what are your thoughts on these 4 upcoming Singapore digital banks expected to operate sometime in 2022? How does it change the banking landscape in Singapore, or the region, or even specifically maybe SME, since we are topic of SME going FinTech today?
Yeah. I think it will be exciting. I think earlier I talked about the gaps. Today, big banks, we focus on the 80-20, right? And there are always gaps in the kind of offerings that we provide. So the virtual banks will come in and for sure be able to fill those gaps. Whether it's SME, the long tail financing, there are a lot of areas where it's totally untapped. And being brick and mortar, has its issues because we have cost issues, and we'll never have enough money to invest in technology, right? So I think to partner with the fintechs, I think that was one of the questions. How do we go about doing that? And for me, the mentality is firstly sharing the same kind of values. We need to be solving a common issue. So essentially, when 2 partners come together, we need to really share some common values. And if you look at the UK, open banking has been around already, but it hasn't really taken off, and we need to ask ourselves why. And for me, I allude that to being enterprise grade, right? Every fintech can want to partner with a bank, but the bank is a custodian of customer information. And whether we are totally regulated. So essentially, the fintechs that partner with us needs to be really enterprise grade. Security must be really, really strong, and then open banking can really bring itself to life. And I think recently with the fintechs, now you can tap all your information from all the other banks. And that's really banks coming together, everybody having enterprise grade system. And it's not penetratable. So I think as fintechs try to partner with bank, you need to get yourself to that level where the bank security experts, will be willing to open up those APIs, right? And opening APIs is not like 2 years ago where we were sharing where branch locations are and bought FX rates, right? Those are not real integrations. And I mean, it'll be quite interesting to see how Singtel and Grab come together, and then a taxi hailing and a telco, two very different characteristics of a bank, of organizations come together and build something really special. Yeah. So I think for us also, everything that we do, and when we partner our chatbot company, PanAI, for instance, it took us just 3 weeks. First we had the same values. We wanted to solve the same problems. We wanted it fast. We don't need it to be perfect, and I think that's a real mentality when we get into our partnerships. We all want to win together. It will not be perfect in any rollout, right? And we just have to be convicted to fix it as we move along. I think speed is important. Being fast is so speed, fast, and delivering and really having that, as I said, the customer journey and delivering the service to the customer. So Eva, for us, was a good example of how we answered all the COVID questions for the customers, help our customers through the application process, and essentially a chatbot created what we call a virtual relationship manager.
Yeah, thanks, Victor, for that. Those are wonderful insights. So we look forward to, I guess, the 4 bank license digital banks as well, and how we, as the incumbent, we continue to compete with them. And I think we can bring this whole banking relationship forward in the whole ecosystem. Now we've got just slightly less than 4 minutes left. Let's have a quick round-up, a summary of our discussions. Paul Hadjy, you're going to get the first bite of the cherry. Anything to tell us out there, the audience out there, in terms of SMEs, in terms of large companies, in terms of compliance and cybersecurity? Any last sharings, Paul?
Yeah. I think generally the biggest thing that I tell companies is actually free advice that helps arguably the most is like having a security culture. So investing in creating that security culture from the CEO or the board on downwards. And I think businesses that do that generally make better decisions around security across the board, as long as the buy-in and the sort of interest from the executives as well as the board is there. And when it's not, I've seen a lot of bad things sort of happen, right? So I think if you're a small business or a big business, making sure that security is an important part of the culture, and the board and executives are thinking about it and asking questions about it to their team. That really kind of helps sort of ingrain the thought process is needed when you kind of like switch the thought around your business. Is your business actually being a target, and making decisions based upon that and what people could want out of your business from a security perspective.
Thanks, Paul. And Oliver, Fraxtor 2021, Fraxtor 2022, what can we expect?
Right, so I think the finance and banking industry has been heavily disrupted during the last few years. The real estate industry is still very backward. So I think moving forward next year, Fraxtor will still continue to penetrate this market, try to expand the use of FinTech in the real estate investments, and definitely try to do more deals, bring on more users in 2021. Yeah.
Thank you, Oliver. And James, Fencore 2021, 2022. What can we expect?
So yeah, we're hoping to continue disrupting this data management space and really allowing financial institutions to become more agile and nimble when it comes to data, because the data landscape is constantly changing and evolving. And if you want to add some new fields to a particular data master, for example, it's really good if they can do that quickly and nimbly without having to spend too much time on that. So that's what we're hoping to help financial institutions with next year.
Like it. Yeah, thank you. It's always nimble, it's always cost effective, and that's what Fencore is all about, right? And with that, ladies and gentlemen, we have reached the end of our session today. I'd like to just give a special thanks to our wonderful rounds of panelists with all the years of experience and traveling and living in different cities all over the world. Victor Lee, please join me to thank together Mr. Victor Lee, CEO of CIMB, Paul Hadjy, CEO and co-founder of Horangi, Olivier, co-founder and CEO of Fraxtor, Mr. James Crosby, CEO of Fencore. Thank you so much, gentlemen, for your wonderful insights and sharing here this afternoon over at the SSF's Singapore channel. And hey, my name is Marc Leong, representing Singapore Financial Association. And thank you so much for tuning in, guys. And till we meet again. And thank you so much. And we'll see you again very, very soon. And enjoy the rest of Singapore FinTech Festival 2020, day 4. Hey, we've got day 4 and day 5 to look forward to. Thank you, guys, and see you soon.